So I'm here with Harrison Connery and Orion Jones, and we're going to talk a little bit about their most recent reporting on Compass. Now, this is a company we've covered extensively, close to $1 billion in losses over the last 21 odd months. So it's a company that everyone in the residential industry is watching closely. But in the most recent quarter, their 10Q revealed some positive steps that they're taking. So Harrison, you want to set that up for us? What's going on? What might have jumped out that would be good for Compass's investors to have seen?
Well, I think immediately, they were reassured by the fact that Compass was gaining market share and that its revenue is more or less in line, or is projected to be more or less in line at the end of the year with its revenue last year. So I think that's what that initial spike was about. Now, when we took a closer look at things, based off of Mike Del Preti's math, we found that, if they can just keep revenue where it is, on a quarterly basis, and accomplish the cuts they announced. They announced $320 million in cuts. If they can just do those two things, they can be profitable next year. It's anyone's guess if they can do that or not, but it's on the horizon.
They're heading into a market that is not necessarily going to live up to the market that they had in 21. So I wonder, Ryan, how are they able to hit those revenue targets with the market having tanked so dramatically?
Well, the purchase price of homes in their main markets has not declined as much as you might kind of glean from the headlines. Yeah. What has declined is the number of homes that are being bought and sold. So that has put Compass into a position where in order to hit its revenue targets, it needs to hire more agents, sometimes from other firms. And that is indeed what it has done.
Yeah. And so when you talk about revenue, I guess you guys are talking about overall GCI, or are you talking about homes sold?
Revenue from home sales.
Okay.
Revenue from commissions.
Okay, so the GCIs. Okay, and we don't have a sense right now what the splits are like when they're bringing in new agents and stuff, right, Harrison? We don't have a sense of has there been any changes to that? I know Rob Refkin, the CEO, had talked about taking a bit of a harder line with agents, commissions.
We don't know what the newer figures look like, but overall, I believe Compass was paying out about 81% or 82% of each of its revenue back to the agents. So we know overall where that stood in Q3, but we don't know how that is broken down among new recruits.
Okay, and what else popped out around from the just from the 10Q? Was there anything else that's of interest that you guys are looking at?
Well, I think when someone hears cost cutting, they think of eliminating a line item maybe in their personal budgets. So buying less yogurt at the supermarket or something. But Compass is talking very deep cuts, about 20% of its quarterly expenditures. So in the summer, it said that amount was going to be $320 million for the remainder of 2022. Only about 20% of that amount was cut from their operating budget in Q3. So it has a lot of money to save in just a short amount of time. The company will have to pay one-time expenses associated with letting some of its employees and agents go.
And so just to summarize, they've only done a small share of the estimated cost cutting they think they need to do, correct, for this year?
That's what is suggested by their SEC filings. Yes, there was a decrease in Q3 operating costs, which sets them up for a much bigger cost-cutting amount in the final 3 months of this year.
Right, and I guess we'll figure out if they, even if they don't hit that in the end of 2022, this is the initiative. So you probably will expect to see other big cost-cutting measures, be there layoffs or scaling back on certain programs or anything like that. So what else are we looking ahead to? One thing, Harrison, I think that was important, and I don't think agents necessarily think about this. One of the talking points at Compass has always been the cash on hand, right? They always talk about having these large reserves, having very little debt, which is true, but Can you talk about the nuance you found with the revolving line of credit and what that might mean?
That's right. Yeah. So they claim to have access to over $600 million in cash, and that is true. But really, that figure is closer to 500 million that they can actually use, because they have 355 million in the bank, and they have access to a $300 million revolver loan. A revolver loan is a loan you can borrow from as needed, as many times as you need, or not at all. That's why it's called a revolver. I don't know where the name comes from, but it's different from a traditional loan. So that adds up to 655 million, but they need to keep $150 million in the bank in order to qualify for the revolver loan.
It's kind of like when we were broke college kids, and we had a checking account, and they said if you keep 10K in the checking account, then your fees are waived. It's a little bit similar to that, right? Like the sort of the dumb way to think about it. But what that means is that 150 million cannot be touched, because if it goes under that, then they lose access to the entire pie, right? That 300 odd million pie.
Absolutely. If they go below 150 million, we don't know the exact terms of the loan, but it's possible the lender would be able to call it all at once. So you really want to avoid that as a company. But they're confident they can. They do bring in a lot of cash, so they're not worried about it, or at least they're acting like they're not worried about it. And the other facet about the revolver loan is revenue has to keep rising every year to keep qualifying. So next year I believe it's somewhere in the 3.8 billion range, and then it's actually over 4 billion in 2024. I forget what the exact number is, but they'll have to keep on pace with that to keep qualifying for the loan.
And that obviously becomes a little more complicated in a market where, as you mentioned, deal volume has dropped. Overall, their deal volume seems fine. I mean, the number of transactions has dropped, so it might be a little challenging. Orion, last question before we close out. Anything on the macroeconomic horizon that might affect Compass and might change the way they look at things right now?
The big question is where interest rates and borrowing rates are going to be maybe in the second quarter of next year. The Federal Reserve is looking at the decline in growth, in rents, and in home sales volume. That was a criticism that it received over the summer, when it was considered to have been late to react to price inflation. So the course that the Federal Reserve will chart over the next 6 months will determine in large part the future of the home sales market, and in major cities like New York, the rental market as well.
Yeah, that's a good point. And I think it'll affect the market in which they play. So the residential market, buyers making purchases, but it'll also affect the kind of debt that they can get access to. As a company, if they need debt, right, the interest rates will play a role in that. So it'll be fun to keep up with it. And your reporting has been really insightful and interesting on this. So looking forward to seeing what you guys come up with next.